Mixed open, but 3-2 advancing for to declining stocks. Given some of the issues last week with the Fed, that's not a bad opening at all. Take a look at sectors. You always want to see semis leading. That's a good sign. Energy also up and bouncing around recently with oil down recently. Transports up. That's another good sign. Banks down a little bit, but again, it is not unusual for bank stocks to be flat to down in the week after the first earnings reports come out from those. So that's pretty much in line with expectations. Where are we right now? Well, if you take a look here, the comments at the end of last week from the Fed were very interesting. A lot of people feel that 50 basis cuts is now very unlikely. That's a bit of a negative. China trade, well, there's been reports maybe there'll be face-to-face meetings scheduled fairly soon. We don't have any confirmation on that, but that's, I think, giving some support to the market as well. We've got tensions rising in the Mideast, and earnings overall are better than feared. I know you've heard reports about maybe earnings recessions. The numbers we are using from Refinitiv indicate there is no earnings recession right now. Just want to show you here, Q1 up, Q2 is still looking on the upside. Q3 is down fractionally, but the general move here is that's going to trend, that's going to trend to the upside right now. This 6.2% for the fourth quarter will likely trend slightly to the downside. The overall numbers here that we're going to see indicate the market should be up 1 to 2% earnings for the 2019 period. That's not great compared to the 20% or more we saw in 2018, but it is not an earnings recession. I think that's the most important fact that we can take away right now. In terms of what's important this week, obviously, the big three are going to be reporting. You heard Jim talking about that. Apple, Alphabet, and Facebook. I have pointed out time and time again, many other firms have been pointing out time and time again how big these companies have become. DataTrek and others have been on top of this. Apple is almost 4% of the S&P 500. Alphabet is almost 3%. Facebook is almost 2%. You put these three together, they're 9% of the entire S&P 500. That's 500 stocks. Three of them are 9%. That means what happens to them happens to the S&P 500, which is why these numbers that they're going to report is so important overall. I just want to show compared to the other sectors in the S&P 500. If you look at the bottom, utilities are 3%, real estate and materials, those three stocks are bigger than these three sectors that have dozens of stocks in them. That's a comparative way to look at this. You can see consumer staples is almost 7%. It's bigger than consumer staples. All of them put together, those three stocks. Energy is only 4%. It's bigger than, twice as big as energy. You get an idea of the scale of these companies? The biggest companies just keep getting bigger, and so they tend to dominate these companies, these groups overall. Finally, other than Facebook and Amazon and Google, the most important stock this week, I think, is going to be 3M. I know Caterpillar is going to be real important. They're going to be on the 24th. But remember what happened here. Was it April 25th, as I recall? This absolutely disastrous commentary where they dramatically lowered virtually every metric you could think of, but principally earnings for the full year, citing notable slowdowns in China, notable slowdowns in the global automotive industry. This was the canary in the coal mine for that big drop that we saw in May. They were the first one to kind of give everybody notice. So remember, we went from 220 here all the way down to, I think it was 160 was the bottom for that. We're talking about a 27% decline in a major stock in about a month. And that is what caused a lot of the problems that we saw in May. And again, that guidance for them, we'll see what we've got here. The important thing is, going to come on Thursday.